Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Boom, and we're live. Happy Monday, everyone. Good day, good morning, good afternoon, everyone, and welcome to the US Markets Open with InstructFX. My name is Andrew, and today I'm bringing you the latest news from the markets 30 minutes before the opening bell. Rian Hobson will join us shortly from Cape Town, South Africa, bringing us the latest news from the commodities markets, and also Neil Wilson, Chief Market Analyst at Markets.com, will join us later on for a great round of market talks. So buckle up, hit that subscribe button, and let's get started. The European stock markets traded sharply lower today with continuing concerns over rising numbers of COVID-19 cases globally, and investor sentiment seems to weigh heavily on the market's direction. The European currencies also traded lower today, with the euro and the pound tanking after the European markets open, leaving many people wondering if the buy button on the trading platform will be of any use this week. Crude oil prices tanked today after the OPEC Plus agreed over the weekend to boost the output in the upcoming months by 400,000 barrels a day. And the US dollar index rallied on the European trading session, pushing gold futures from their highs back down to below $1,800 per ounce. Cryptocurrencies also tumbled today, with the Bitcoin eyeing the $30,000 mark and Ethereum price falling below the $2,000 once again. And obviously, the stock markets will be in focus today as the earnings season is heading to its peak, with IBM reporting today, Netflix and Philip Morris reporting tomorrow, and on Wednesday, the earnings calendar will be literally packed with Johnson & Johnson, Coca-Cola, Verizon, and another dozen high-cap companies reporting their earning numbers. More about this topic and the US Markets Open coming up. Right, the US dollar, guys, got a boost today against its other peers as rising COVID-19 cases worldwide continue to mount, casting doubt over the world economic recovery. The US dollar index broke the 93 level for the first time since April, pushing the European currencies lower and gaining over 0.5% against the South African rand, the Mexican peso, and also the Chilean peso. The summer season in Europe seems to be bringing more headache than relaxation after a number of European countries, including France, the Netherlands, Greece, and Spain, announced new restrictions last week in a bid to curb a rise in COVID-19 infections. The French government has since backtracked on plans for sweeping new rules to expand the use of vaccination certificates after massive protests over the weekend. However, fully jabbed travelers returning to England and Wales from France will still have to quarantine from Monday. England, it's Freedom Day in England today, with England lifting its restrictions, including social distancing rules and limits on social gathering, trusting a successful vaccination program to defend its population from serious illness as a number of its recorded COVID cases tops 50,000 per day, Peter Nurse wrote in an article on investing.com. And now looking at the charts, guys, on a daily chart, we can see the US dollar index above the 200 moving average and consolidating in that region. If this consolidation will continue, probably traders will eye for the 93.60 mark as the first take profit target or beyond. In contrast, the euro seems to be moving backwards, potentially targeting the 117, while the pound seems to be inches away from the 136 versus the US dollar. Now, in 30 seconds from now, we're going to have great news from the commodities markets where Rian Hobson will join us from the sunny South Africa. So stay tuned. We're coming back live in 30 seconds with the news from the commodities markets.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, live news from the commodities markets, people. OPEC Plus, the Organization of Petroleum Exporting Countries and its allies, agreed over the weekend to boost the output in the upcoming months by 400,000 barrels per day, sending crude oil prices below the $70 mark for the first time since 10th of June this year. Joining us live from Cape Town, South Africa, Rian Hobson is bringing us the latest news on the oil markets. Rian, very good day to you. How are you? Can you hear me, Rian?
Yep, I can hear you now clearly.
Okay, I can hear you too now. Very good day, Rian. How is South Africa doing today?
Oh, we are good. A bit cloudy, but okay.
Are the protests still ongoing, Rian?
Yeah, not much. Actually, the South African Defence Force was deployed in KZN and in Johannesburg. So that actually cooled a bit off, but it's more coming from the people of South Africa that actually shut down the whole protest. Actually, it's not much, I would say, security forces. Was it not for the people, I think we would have still been seeing a lot of protesting happening.
Right, I'm with you. Well, I don't know if it helps, but Europe is more or less on the same side with South Africa. We have massive protests happening in Europe against vaccination, funny enough. But anyway, we're going to get to that in a few minutes. Now, let's talk about commodities, Rian. Over the weekend, we saw a resolution from the Organization of Petroleum Exporting Countries and its allies. Yeah, that was long awaited, let's say. And the market's reaction this morning, oh my God. Can you tell us more about this, Rian?
Yes, for me personally, the 400,000, it's a bitterly a drop in the ocean. If you look at the demand side of oil, especially coming from the United States, and OPEC actually did admit that there is actually a shortage and they need to pump more. But 400,000, I also do understand when they're talking about the Delta variant and the fear of maybe another lockdowns that will come, especially we saw this morning out of Australia. But honestly speaking, the 400,000 for me is a drop in the ocean. Personally, what I think, oil prices will surely go up and down, maybe to 60, 67 level. And then from there on, there's a high possibility that it could just actually retrace backwards up. The big thing that I actually looked at, it's more for me about the US. This is still the big conundrum for me. This is the oil rigs. And this is now the 5-year chart that I put on. Normally with your oil rigs, and especially with a high oil price with above 70, you would expect oil rigs to be sitting at least at 800 or so. But here we're sitting at 378, although it's slightly going up, but it's not in the form that what we know. When oil production is oil prices are going up, then normally the US shale oil is coming quickly on stream. And that normally suppresses the oil price. But as things stand, nothing is actually happening. There is an increase, but not to the extent that can suppress actually the oil price. And I think that's why OPEC is feeling free to pump more oil out. But I think it's more of caution that they pump out about 400,000 barrels per day.
Also, we saw that not only the UAE, more countries from the Organization of Petroleum Exporting Countries had an upgraded quota. Yeah, a thing that the UAE was advocating heavily last week when they had the disagreement with Saudi Arabia. Okay, is that a good thing for the oil markets, you think, having their quotas upgraded?
I think they needed to actually to get some sort of solution with the quotas and all that, because they were afraid that it was going to be every man for himself. And if that is the case, then surely the oil would have sank. So I would say actually OPEC felt the pressure and they needed to come up with some sort of solution. And even they were talking about renewing everything in December. So they would, for me, it looked like they were just talking anything to get everybody satisfied so that OPEC don't break up. But at the end, for me, I think the 400 barrels per day it's a drop in the ocean. I personally think that the oil prices will still go up because I mean, we're talking about millions of barrels of oil in shortage. So they need to crank it up more.
I agree. However, there is an issue, Rian, around the world. Apparently, the global demand, will suffer as the COVID-19 pandemic is far from over, and we see a lot of countries around the world re-implementing the lockdown measures. So if that's the case, then what if the demand will drop drastically, in the second half of the year? What's the point of overproducing if there's no demand? That usually will send the oil prices down. Fair enough?
That's actually fair enough. And I think that's why we're having the protests in Europe, because people just want to go out. And I think, I don't think that the world can stand another lockdown. I personally think so. If that happens, it will create a bit of mayhem. I can see actually in South Africa, people are totally fed up. Governments need to be very careful when it comes to more restrictions on lockdown. Even Australia, for example, I don't know if you follow Sky News Australia, but those guys look very fed up with more lockdown restrictions, especially in Melbourne and Sydney. So more lockdowns, I'm not sure will governments actually take the chance of doing that.
I know, but if people don't understand that the benefits of the vaccines outweigh the risks, and that by having the vaccine, it doesn't necessarily mean you're 100% protected, but it means you're 96 or 94% protected from death. Okay. If people would start complying more, instead of talking about conspiracy theories and governments looking to control them and so on, I think the situation will be a bit different. Because look at it from the other point of view. What maybe the average person doesn't know, that doesn't really understand how the economy functions, regardless of any interests, and any other conspiracy theories that people might be talking about, the countries, economies have suffered massively, in the last 16 months or so, 18 months or so. And the countries, the European Union, the US, and many other countries around the world had to print an awful lot of money, boosting the inflation, skyrocketing the inflation, just to try and keep this situation under control. So it's not only about conspiracy theories from my point of view. It also has to do, if you look deeper into economies and into the impact of printing so much money on the long term, I think people will start understanding that the situation is a bit different than whatever they see on social media. And talking about social media, I saw today that Joe Biden slammed Facebook last night for allowing people to keep trashing the vaccination program, because this is it. It's the fear of missing out when it comes to cryptocurrencies, and it's the hype of the social media when it comes to the vaccination program.
Right.
Talking about that, the US dollar skyrocketed today and gained over 0.5% versus the South African rand, and versus the Mexican and the Chilean pesos. Show us the South African rand charts for a minute, and let's see how big the impact was, and the movement today.
This is actually a lot to do with the actual protesting, and I actually was reading an article earlier where they were talking about actually about shorting the rand, especially when it comes from I think it was Deutsche Bank, and the other one was Citigroup. And they were explaining about the situation in South Africa, especially the Durban Harbour. The Durban Harbour actually consists of 60% of South Africa's import and exports. So, and that harbour is currently closed. And there's a lot of, especially your car industry in South Africa, which create enormous amount of jobs, especially VW and those other companies that they have. So if that harbour stay closed, this rand is sitting here literally on buying time. That is just personally my opinion. And then on top of that, you're South Africa, they're sitting with over 80% of debt, government debt. Then the main thing is other two parts is 7% of South Africans is currently vaccinated, and you just were talking about vaccinations. Another problem, which is a big problem, it is the elections, the municipal elections, which is local elections basically. That comes on the 27th of October this year. And the situation is a bit volatile because 2/3 of South Africans, there was a study done by University of Johannesburg, where they were saying that 2/3 of South Africans don't want to go to the polls to go and vote. Now, that is an issue, especially now with the whole protest is happening. And now you want to stop or postpone the elections. Now, that is a bit risky. I think they must just keep on with the elections and don't bother about postponing it. Because if there's postponement, there will be more political pressure to South Africa. And that could actually affect the rand severely. And that's why I think when it comes to the rand, I personally think that for me at fair value for the rand, we must looking at more, of my personal opinion, at about the 1550 market, what I explained to you the last time. Yeah. Due to all these factors, even with the South African finance minister, South Africa is sitting with a mountain of debt. We literally pay debt on debt. So we have a bloated government, a huge government, a lot of ministers, and a lot of money get looted through it also. And the deficit of our government is just increasing, and it's just increasing every single time. Those factors that come in, and he's not interested in cutting back on ministers or cutting expenditure. And all these factors are adding in. We have lockdown for companies not doing well. The deficit is keeping on increasing. We only have 7% of people that are vaccinated. We have elections on the 27th of October. All these factors for me is saying that the South African rand is totally, for me, not at the correct space. I think for me personally, it needs to sit at about 1550 for me.
All right, so that would be a fair exchange rate. That would keep the South African rand, let's say, under control. Now, one last question for you, Rian. Can businesses sustain another 6 months to a year of lockdown and protests in South Africa, Rian?
Oh, there's some estimations that are coming through that we're sitting with about 14 billion rand of damages in South Africa, just in one province. With all the looting and burning that goes on. I'm definitely not sure if companies will sustain another lockdown in South Africa, especially when it comes to the people itself. What was for me strange with this whole entire protest, everybody's saying it's poor people that were doing the protesting. There were people who were driving cars that were looting. So that just says that the middle class people are suffering. That is for me the big thing there, is that middle class people are getting downgraded to being poor now because of all the lockdown and the restrictions. And once you have a revolt or something starting from the middle class, then it gets to the violence of what we saw in KZN.
Right, I'm with you. I don't know if it helps, but the situation in Europe isn't getting any greener either. And the US seems to have a big spike in infections as well. So by the looks of it, we're all in this together. And only God knows when things will start getting back to normal. It's hard everywhere, and protesting and fighting your own government against your own people, I don't know if that's the best solution to move forward. But anyway, Rian, thank you ever so much for today. Stay safe, and I'll see you again tomorrow.
Thanks a lot, Andrew. Yes. Bye-bye.
Take care. Right. Today is a big day for the United Kingdom as almost all remaining official restrictions on businesses and social life are being lifted and people are getting ready to celebrate. In the same time, the United Kingdom reported over 50,000 new cases on Saturday, and the people's enthusiasm seemed to be deteriorating fast. Again, a word that causes me a bit of an issue on this beautiful Monday. Now, is UK reopening a bit too soon? Are people celebrating a bit too fast? This is the question. More about this topic in exactly 30 seconds with Neil Wilson, Chief Market Analyst at markets.com from the heart of London. Stay tuned.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, I have the great pleasure to introduce to you Mr. Neil Wilson from the heart of London. Neil, good afternoon and welcome to the show. How are you today?
I'm very well, thank you. Yeah, all good. It's a sunny day, and the lockdown is over. Well, in a sense, anyway.
Are you in the party mode? How is the situation in London, Neil? London ready to live?
I mean, let's face it. There's not a massive difference between today and yesterday partly because it's a Monday, so you're not seeing too many people out and about partying. But I think people also just waiting to see how it sort of looks. I don't think the trains were very busy today. Obviously, you've got a bit of a split as well. Some people who are afraid to travel if people don't wear masks, and other people who simply don't feel like going to the office these days anymore either. So yeah, it's a bit different. But I did pop down the local at 12 o'clock today for a swift one just to show my solidarity.
Okay, right. On Saturday, the UK reported over 50,000 new COVID cases, which was basically on par with Indonesia, which was the hotspot in Asia in the last couple of weeks. Do you think UK is ready to reopen considering the recent spike in cases, Neil?
Yeah, I do. I mean, I'm in the sort of camp that thinks that we should have reopened a long time ago. I think lockdown causes more harm than good, and I think we're clearly seeing that the vaccines have broken the link between and the number of cases and the number of serious illness and death. So I think it's time to move on, and we have to accept that it's a risk that you have to live with, just like any other disease that exists in our society.
Yes, and also if more and more people would stop fighting the government against the vaccinations, probably things will get back to normal way faster. We saw the pound tumbling versus the US dollar this morning. 137.05 is the current market price. There's the European markets open. Big crash for the pound. Do you think this will continue, Neil?
Well, yeah, I mean, it's just finding that support. I think it's the 200-day moving average it's testing now. It does look like it's approaching some pretty important neckline support there, as you can see it there. I think the lowest from a couple of months back. You break that that moving average, you break the neckline support, then yeah, you could be looking at further weakness for sterling. But I do think that a lot depends on it's a sort of broader risk story. It's whether markets are very much in a risk off mode today, and so the sterling is getting clobbered because it's really a risk on, risk off currency. I mean, it does well when the markets do well. It does less well when people want to find safety in the US dollar. So I think you're just seeing dollar strength coming through. If you look at the dollar index, I think there's the way that chart patterns progressing. I think we could see a bit more near-term upside. I mean, it's always difficult calling it longer term, but I think when you look at that, you think that there could be some movement to retest the year high up there. So yeah, it's been a bit of a bad day for risk though in general. So I'm not sure if that's a sterling story as such. I think probably the Bank of England is going to be raising rates a bit sooner just because of the inflation scare, and that should support should support the pound to an extent as well. So I'd be confident that the UK economy is going to bounce back, that we're not going to go back into lockdown, and that sterling should be ultimately moving a bit higher. But near term, yeah, there could be further to run to the downside.
Right. Okay. Now, with the earnings season heading to its peak, let's have a look at the stock markets and see what is expected to happen this week. And after closing Friday in red, the S&P 500 and the Dow Jones are pointing again to a lower opening today, with the Dow Jones down a hefty 1% and the S&P 500 down 0.7%. And also the Nasdaq was down 0.3% before the opening bell. Why this aggressive sell-off, Neil?
Well, I think you can sort of boil it down to one word, which is stagflation. So just we've had some very strong inflation prints from the US, the 5.4% for the June CPI, and the University of Michigan consumer inflation expectations on Friday came in at 4.8% for the next year. That in itself can be looked through. You know, the Fed saying it's transitory, it's fine. The problem is if you get that and it becomes less transitory, it becomes a more permanent state, or at least more persistent. If that's happening at the same time as growth starts to weaken because, say, there are fears of new lockdowns, or there are new lockdowns in the autumn, then you get this uncomfortable period of stagflation where I think you see growth starting to wane, but the inflation remains there, and that's really what the market doesn't want to see. But ultimately, I think probably we're seeing a rollover. I think we'd expected a sort of 10% rollover in markets. So I think you're going to see that S&P 500 test its 50-day moving average again, and then bounce, or maybe trade through it, but then ultimately bounce back. Most stocks have been rolling over for some weeks now. The market's been held up by its bootlaces by big tech. And so once big tech starts to crumble and get sold off, and it probably will through earnings season, I think you see big tech just rolling off a bit over earnings season, and then you're back to the races come September.
Right. Okay. Now let's have a quick look at the earnings calendar. This week, the earnings calendar is absolutely packed with data. Today we have the IBM report. Tomorrow, Netflix, Philip Morris, and another dozen companies report. And on Wednesday, Johnson & Johnson, Coca-Cola, and Verizon are just a few of the big names reporting. We had an amazing start of the earnings season last week with all the big banks reporting record numbers. How do you see the second quarter for these companies, Neil?
Yeah, well, I think you're going to see some pretty spectacular numbers. Especially some of these cyclical names, they've had a good quarter as the American and certainly some places around the world, but chiefly the American economy is reopened fully. But the market's discount. I think we're discounting these numbers already. And I think what my expectation is that it's going to be a sort of sell the news type earnings season. As I say, you see this rollover in the market, and then once that gets washed out, then buyers will be coming back in. But I think you just need maybe a couple more weeks, maybe longer. It's always hard to judge the exact time frame, but you see a little bit more of a rollover in the market, and that's probably coinciding with earnings season. So I don't think that the numbers will have to be so spectacular in order to prevent the market just selling into them. I think. Because you've sort of discounted Q2, you're now looking to see what the guide is on Q3, Q4, and it's likely that there's going to be some sort of nagging concerns about variance, about inflation. Still there's supply chain problems, chip shortages. Although commodity prices have already come off their highs, there's still a big problem there, and there's still costs. I think costs. Key thing this earnings season will be what the management say about the costs that they're incurring now, and how much they're rising, what wages they're having to pay, because that's obviously what's going to eat into multiples, so margins. So yeah, and it's a very interesting earnings season, but I don't think that great EPS numbers are going to translate into great performance for the shares.
Yeah, exactly. Because I mean, with the inflation in the U.S. reaching alarming levels, many analysts see the U.S. economy on the edge of collapse. Do you think the U.S. inflation is sustainable at this pace, or it's just a short-term fluctuation?
I think the Fed's allowed inflation expectations to become somewhat unanchored. They've allowed that to happen, and it's maybe got a little bit out of control. But I don't think you see 5.5% month after month after month. But it doesn't take too many of those before you've got permanent, permanently higher cost, or inflate. That you don't see it go back down, if you like. So I think that means that workers, for example, are saddled with higher. Workers on low wages are still saddled with higher prices. Their spending power is reduced. Businesses incur higher costs, and those remain in place. But also, I do think that probably, although you don't get 5.5% month after month after month, you still get quite a high. I think it's going to be more persistent than the Fed has said it thinks it will be, and I think the Fed is coming around to that a little bit, and so I expect to see some movement from the Fed at Jackson Hole in late August, or potentially they'll wait till the September meeting. But I think probably they'll tee it up at Jackson Hole.
Right. With everything that goes on in the world right now, many traders might take a step back from trading the earnings season or trading Forex. But I know that on markets.com trading platform, you can also purchase physical stocks. Yeah, as physical as a stock can get. How does that work, Neil? Can you give us some guidance on the whole process, please?
Yeah, I mean, it's actually relatively straightforward. It's if you're on the website there, you click on the investing part. So that along the top, you get trading and investing. Or I want to trade, I want to invest. And so Markets Eye is the investing product. And you can simply open an account if you're in one of the countries that we service. Obviously, it's not in every country, but simply open an account and fund it and start looking for stocks that you want to buy. I think there's something like 8,000 stocks available from 16 different global exchanges. It might be slightly more than that now, but you're buying direct from the exchange, as it were. So it's a kind of it's not right to call it direct market access, but it's you're buying it direct, if you like, and yeah, you can just open an account if you've already got a trading account, spread bet, or a CFD trading account. Then it's easy to do from within your account. You can just add the account, and it creates a new one for you, which you obviously have to fund separately. It's not cross collateralized with your CFD account or anything like that. But you can do that. You can also look at the investment strategy builder, which is a kind of a parallel product. So you have share dealing, which is our direct funding, direct stock buying platform. The investment strategy builder, though, is a kind of new tool, which allows retail traders and investors to apply a quantitative approach to investing. So they can create their own parameters based on different technical, fundamental, and sentiment based indicators, and so it allows them to fine tune their portfolio, and then it automatically rebalances for them based on those parameters. So you can have a play with that and see what sort of returns you would get or would have got over the last few years, and then start to work that into your own strategy.
Awesome. So basically, if you go on markets.com, or MarketsX, and if you see the blue background, it means you're on the trading CFDs side. If you see what is this? A pink?
I don't know. Sort of pinky orange. I'm not sure.
Yeah. If you see this color, then you're on the stock purchase program. Now, question: are there any? Well, there you go. Yeah, the blue represents the CFDs, and the pinky orangey, as Neil said, represents the stock purchasing. Now, Neil, are there any advantages of purchasing stocks with Markets.com instead of trading them as CFDs?
Well, I mean, you obviously the difference would be similar to any other platform, but the chief difference with buying the stocks is there's no commission on the stocks if you buy them outright. you obviously own the shares. You don't, you don't pay overnight funding charges, and so on. It's unlevered, so that means, by definition, there's less risk, but also there's less potential to make money if it
with
goes
little
up.
money. Yeah,
Sorry.
with little money, there's when you trade leverage products.
And you're not able to short. It's an outright purchase. It's for more for long term investing. But it's quite, obviously, its clients find it useful because it's all in one place. They've got one, one login, if you like, and then can access the different accounts, CFD, spread bet, investment strategy, and share dealing. So there's 4 different accounts that they can access from their portal, the markets.com portal, and then of course also MT4, MT5. So there's because we offer that range of accounts. I think that's why clients find it useful.
And is purchasing stocks only for experienced investors, Niels, or anyone can do it?
No, I would say it's arguably more open, if you like, than CFD trading, and because of the risks associated with leverage trading. You're dealing with a simpler product. You're just dealing with stocks. You're just dealing more of a long-term basis, and you're not having to sort of worry about margin calls or overnight funding charges and rollovers and all the different aspects of CFD trading. So I think it's open to anyone really, as long as they do the research and use the tools on the platform to come to an informed decision.
Brilliant. And if anyone needs a bit of help when they start this stock account with markets.com, how do they get assistance? Is that available for them?
Yeah, so just in the platform on the website, there's a 24 hours, 5 days a week live chat. So as long as you're not trying to do it at the weekend, then you can get instant support from our client services team, or you can call. There's a number on the website to call up, and there's a team of client services people who will talk you through it and help you guide you through the whole process.
Right, understood. Neil, thank you ever so much for being with us today. I'm looking forward to see you on Thursday if you're available, and see what else is going to happen in the markets this week. Thank you so much for being with us today, Neil. I'll talk to you soon.
Cheers.
Right, let's take 30 seconds ad break, everyone, and then we're going to come back with the crypto news, because we cannot forget the mighty Bitcoin and Ethereum. Let's see what has happened over the weekend in the crypto sphere. Stay tuned, we're coming back live in exactly 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, and we're back with the crypto news. Happy Monday once again. So, while some parts of the world completely ban the use of cryptocurrencies, others are gladly embracing Bitcoin as a medium of exchange. Bitcoin peers reported that the city of Tennessee in the United States is looking to allow residents to pay their property taxes with Bitcoin. And Las Vegas strip club Crazy Horse 3 has joined the list of companies to now accept Bitcoin payments. That is great news, or what? Now, another good news for the crypto enthusiast is that Bank of America has enabled Bitcoin futures trading for select clients, and Grayscale Investments, the world's largest crypto asset manager, has teamed up with Bank of New York Mellon to convert its Bitcoin trust into a Bitcoin ETF, a Bitcoin exchange traded fund. How awesome is that? So while the retail traders are still undecided on whether to go long or short on Bitcoin, institutions seem to be working on something big without making too much noise about it. Another interesting news came after China has banned the mining of cryptocurrencies in the country, but mining hubs came up with an instant solution, moving their businesses abroad, of course. One of China's largest crypto mining machines manufacturers, Bitmain, has opened a physical Bitcoin mining shop in Turkey, in Istanbul, and other mining giants are still looking for viable solutions in Europe and South America. Meanwhile, the pressure on the crypto exchange giant Binance has continued to build up in the last week, with Binance finding it very difficult to offer its services for a number of countries worldwide. Over the past week, Clear Junction, a global payment solution provider and a key partner of Binance, disclosed that it would no longer facilitate pound or euro payments to the exchange. Italian regulators have also stated that Binance was not authorized to operate in the region, and Binance, in response, has terminated its stock token offerings. Although more and more countries join the regulatory scrutiny on Binance, Visa and MasterCard have reaffirmed their support for the exchange, noting that customers could still use their payment cards on that exchange. So what the future holds for Binance, we shall see. Now, with this being said, we saw the infamous Bitcoin dropping sharply over the weekend. Yeah, it's heading towards the $30,000 mark once again. While Ethereum, guys, has also been affected by another news, which I'm going to share with you in a few minutes from now. And it broke the $2,000 mark to the downside once again, currently trading at $1,811.94, or $1,812.21. Okay, now let's see what was the news that led to this this drop in Ethereum price. Right, pretty straightforward. Bitcoin Peers reports that over 20% of Ethereum supply is controlled by just 10 wallets. Okay, the news came out on the July 16th this year. So let's go through the article together and see what this is all about. Amid the current crypto market slump, Ethereum whales have continued to accumulate the second largest cryptocurrency. The top 10 Ethereum wallets now hold a whopping 20.5% of the asset's total supply. According to on-chain analytics firm Sentiment, these big money players took profit by offloading their stash when Ethereum soared to its all-time high at $4,400 in mid-May. At that time, whale wallets accounted for an estimated 18.4% of Ethereum's circulating supply. Okay, there is the graph here. We can also see a graph, okay, with the price versus the supply. Okay, the total supply. However, as the crypto market slumped on China's clamp down news, they began buying the dip. Sentiment profiled the buying behavior of Ethereum whales over the past few months. The firm assets that in the past 41 days, Ethereum whales have grabbed an additional 2.12% of the assets' total circulating supply. This brings the total figure controlled by Ethereum whales to 20.58%. Wow, okay. This is what's happening, guys, with Bitcoin. This is what's happening with Ethereum. Yeah, and get ready for more to happen with Ethereum, as in a couple of weeks from now, in August, we're going to have the London fork, yeah, which was expected. The London fork, once again, is supposed to lower the cost, yeah, burn the gas fees, to use crypto lingo. And if you need your transaction to be processed faster, as a user, you can also tip, yeah, the verifiers, yeah, the miners. Right, outstanding news. Let's see what's going to happen from now on. Now, let's take another 30-second break, and then we're going to come back with the charts of the day and the signals of the day to see how the markets opened on this beautiful Monday, 19th of July, 2021. Stay tuned. We're coming back live in exactly 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, we are 15 minutes into the U.S. Trading session today, and we see crude oil WTI futures tanking drastically after the U.S. markets open. $68.28 is the current market price. Big tank after the opening bell. Also, in the right-hand side, in the right corner at the bottom, you can see a breaking news. Wall Street tumbles as COVID-19 fears opted reopening trades, and Dow Jones down 450 points after the opening bell. So crude oil WTI is tumbling by the looks of it. Okay, 68.28 as things stand right now. Let's see what's going to happen later in the session. The euro seems to be gaining a bit a few minutes into the U.S. trading session, trading at 118.21 versus the U.S. dollar after it tanked the entire European trading session. Let's see if it's worth buying that retest of the 200 moving average at 118.26. Let's see what's going to happen. RSI still pointing upwards. Stochastic still pointing upwards. But by the looks of it, we might continue the downtrend for Europe. Yeah, for the euro, as Europe is under tremendous pressure. COVID-19 restrictions. The UK reopening its gates today, but on Saturday, reported over 50,000 new COVID cases. Floods in Germany, floods in other parts of Europe as well. A lot of pressure is shown on the European currencies. Let's have a quick look at the pound, which continues the downtrend today after the opening bell, 137.10, and dropping as we speak, with the RSI and the stochastic pointing downwards and holding onto the charts for dear life. Wow, USD JPY also took a hit after the opening bell, 109.11 indicated with the RSI and the stochastic way off the charts to the downside. Let's see what's going to happen. The Aussie dollar seems to be following the euro with a very shy correction after a drop on the European trading session today, 0.7360 current market price. We might see a push a tad higher, potentially testing that yellow line, which is a 50 moving average, yet to the upside as 0.74 flat. Let's see. However, a lot of pressure is happening on the European currencies, a lot of pressure on the Aussie dollar, a lot of pressure on gold futures as well. Right, USD CAD, on the other hand, had an amazing rally on the European trading session today, 127.54 after the opening bell. And by the looks of it, we might witness another rally to the upside from the US dollar. RSI stochastic up into the overbought levels. Okay, they had a bit of a pullback about an hour ago, but we see a bit of consolidation happening there in the upper side of the chart. So I'm not going to be surprised if I'm going to see the US dollar rallying again on the back of the issues that Europe is facing nowadays. Let's have a quick look at the opening of the S&P 500 and the Dow Jones, which both took a big hit today, opening to the downside with a massive gap, $4,261.40 for the S&P 500 after the opening. And we're looking at the Dow Jones pushing to the downside, an incredible $34,084.55 for the Dow Jones Industrial Average after it tanked over 450 points or 425 points after the opening bell today. Apple is trading in the red after the opening bell as well, 142.83 for Apple, and I'm not going to be surprised if we're going to see a retest of that 200 MA to the downside at 137.64. Amazon opened to the downside as well, retesting that 200 moving average at $3,535 flat. We're looking at the US dollar index correcting after the rally that it had on the European trading session. However, if you look at it on a 1 hour chart and you zoom out a bit, you can see that we're looking at an uptrend. And the price is well supported by the 50 and the 200 moving average. Gold futures tanked a bit before the opening bell, all the way down to $1,795.81. After the opening bell, we saw a bit of a correction that was expected to happen. And currently, we see gold futures trading at 1,813.05. Bouncing from that 50 moving average. So beware, the downtrend might continue for gold futures if we're going to see the US dollar index strengthening today. Right, let's see what's happening with Brent oil futures, or the UK oil, which is currently trading at $70.16. Yeah, tanking over $7. Okay, in the last few trading sessions. Right, we saw Brent oil futures trading all the way up to $76.74 on the 14th of July, which was last week. Yeah, and that shows a draw of over $7 to the downside. Silver futures also suffered on the European trading session today, trading all the way down at $25.04. Okay, we see a very shy correction, but nothing has happened yet on the silver side. Let's see what's happening with Tesla. Tesla opened to the downside, trading today at $628.50. Facebook opened to the downside, trading at $337.17. And I'm not going to be surprised if we're going to see Facebook tanking even further, as Joe Biden himself, the US president, slammed Facebook for allowing COVID-19 haters, let's say, vaccine haters, to post freely on Facebook, even though the numbers are skyrocketing. Let's move on. Let's see what else is happening with Alibaba, which also opened to the downside today, $204.87 as we speak. And Bitcoin, guys, took another hit, eyeing for that $30,000 mark, currently trading at $30,632. Ethereum is suffering as well, $1,808.34 after the opening bell in the US on this beautiful Monday. But good news is coming for Ethereum. Yeah, we're only a couple of weeks away from the fork, the London fork that is expected. Let's have a quick look at some trading signals provided by investing.com as we are already 30 minutes into the US trading session. We see the euro correcting after the sharp drop versus the US dollar, with 3 strong buy indications coming from investing.com. We're looking at the pound trying to correct as well, with a very shy buy indication on a 5-minute chart, but the hourly and the daily remain strong sell. We see USD JPY and USD CHF correcting after the gains they had today on the European trading session. Yeah, with 3 and 4 strong sell indications for USD JPY and USD CHF. Aussie dollar seems very, very undecided, with the hourly and the daily signals indicating a strong sell. And the euro versus the pound seems to be strengthening today, with 4 strong buy indications. USD CAD is indicating strong buy on a 5-minute chart, hourly and daily. And as we get towards the bottom of the chart, we can see the euro tumbling versus the Japanese yen, with 4 strong sell indications. The pound versus tumbling as well versus the Japanese yen, with 4 strong sell indications. And also the pound seems to be tumbling against the Swiss franc as well, indicating 4 strong sell. Let's have a quick look at commodities markets half an hour into the US trading session, and see what investing.com thinks about gold, silver, crude oil, and natural gas. Yeah, we're looking at a strong buy for gold. Silver is undecided, with the hourly and the daily remaining a strong sell. Copper is a bit undecided, again, with strong sell indicated on a 1-hour and a daily chart. And crude oil, WTI, and Brent oil seem to be continuing the downtrend, guys, selling off sharply after the US markets open, with 4 strong sell indications on all 4 time frames. In the same time, US wheat seems to be gaining a bit today, with 4 strong buy indications on all 4 time frames. Right, this is it from my side today, guys. Happy Monday once again. Join us again tomorrow for a new round of market talks. And until next time, remember to trade responsibly, and may all your trades be in the money. This video was sponsored by Markets.com.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.